All right, everyone. Well, welcome back to Talk Tickers. Today, we're going to be dissecting Lowe's Q3 2024 earnings call. It's a fascinating one with some unexpected twists and turns, so against a market backdrop that's, well, let's just say, a bit shaky.
Yeah, that's a great way to put it. Interest rates are stubbornly high, and the economy is giving us some mixed signals. Consumer confidence. Let's just say it's seen sunnier days.
Exactly. So not exactly the ideal environment for a home improvement giant, right? But here's the thing. Lowe's managed to beat earnings expectations.
They did, but it's not as straightforward as it seems. While they did surpass those earnings projections, overall sales actually dipped by 1.1%.
Okay, so a little bit of good news, a little bit of not so good news. I know you always dig beneath the surface, so what's the real story behind those numbers?
Well, remember those hurricanes, Helene and Milton? Turns out they played a significant role. Those storms actually boosted Lowe's sales by about 100 basis points. Factor that out, and sales were still slightly better than analysts predicted, but the growth picture is definitely less rosy.
Interesting. So a bit of a hurricane-induced bump. But let's move on to a definite bright spot. The pro segment. Word on the street is that Lowe's is absolutely crushing it with the pro customer.
They are. Pro sales are up with high single-digit positive comparable sales. That's huge in a market like this.
Yeah.
Their strategy to win over the small to medium-sized pro customer seems to be hitting a mark.
So what's the secret sauce here? What are they doing that's resonating so well with the pros?
A few things. First, they've been strategically expanding their pro brand offerings, making sure they have the high-quality, reliable tools and materials that pros demand. Second, they're focusing on improving service levels. For busy pros, time is money, so Lowe's is making it easier and faster for them to get in, find what they need, and get back to work.
Makes sense.
Yeah, and also the never-out strategy for key pro items. They're laser-focused on ensuring those essential products are always in stock. You know, the last thing a pro needs is to make an extra trip because the store ran out of something as basic as nails.
Right. Nothing more frustrating than a wasted trip. But there's one initiative that caught my eye. Shop the Job. Tell us about that.
Shop the Job is a game changer. It's a new digital tool designed specifically for pros, allowing them to purchase everything they need for a project all at once. It's all about efficiency and eliminating those frustrating last-minute runs for forgotten items. They're initially focusing on kitchen, bath, and flooring projects, but I wouldn't be surprised to see this expand to other categories soon.
Smart move. Now let's shift gears to another area where Lowe's is defying the odds. Online sales. They're up 6%. Which is pretty impressive in this market. What's driving that growth?
Well, their mobile app is definitely a winner, with traffic surging by double digits. They've also been smart about expanding their same-day delivery options, especially for paint. Let's face it, nobody wants to wait a week to start painting when they're ready to go.
Absolutely. Convenience is king, especially in the DIY world. But let's be honest, not everything is coming up roses for Lowe's. The DIY segment, which has always been their bread and butter, is facing some serious headwinds.
It's true. DIY sales, especially those big-ticket discretionary purchases like appliances and flooring, are down. And the culprit, you guessed it, the economic pressures facing consumers. High interest rates and inflation are making people think twice before splurging on those larger home improvement projects.
Yeah, the economy is definitely putting a damper on things. So what's Lowe's plan to get those DIYers back in the spending mood? Can they actually pull it off?
Well, they're playing their cards close to their chest, but they've hinted at a few strategies. Their new MyLowe's Rewards loyalty program is one area they're betting on. They're also experimenting with exclusive events for loyalty members, like their recent Member Week, which seems to have performed well.
Intriguing. But here's where it gets really interesting. They're being incredibly tight-lipped about the specifics of their grand plan to revive DIY. They're essentially teasing a big reveal at their upcoming investor conference in December.
Yeah, it's a clever tactic creating buzz and anticipation, but it also raises the stakes. Can they convince investors that they have a winning formula to get DIY back on track? That's going to be the million-dollar question.
All right, so we've got pro sales soaring, DIY sales slumping, and online sales holding steady. What about the all-important margins? How did Lowe's fare on that front?
Well, their gross margin actually saw a slight increase. However, those hurricanes we talked about earlier had a noticeable impact, offsetting some of those gains. Think about it. The product mix shifted towards lower margin items like generators and chainsaws, plus they incurred higher transportation costs to get supplies to storm-affected areas. And then there were the inevitable inventory losses due to storm damage.
Ah, yes, the hidden costs of Mother Nature. So a mixed bag on the margin front. What about SG&A expenses? Any surprises there?
Not really. SG&A deleveraged primarily due to those hurricane-related costs. philanthropic support for impacted communities, repairs to damaged stores and facilities, extra labor costs, it all adds up.
Right? The ripple effects of those storms are definitely being felt. But let's not forget about Lowe's ongoing focus on efficiency and cost management. Their perpetual productivity improvement initiatives, those are still delivering results, right?
Absolutely. Those PPI initiatives are proving to be incredibly valuable. And let's not forget their successful cost clawback negotiations with suppliers. They're taking those savings and reinvesting them for future growth, which is a smart strategic move.
Okay, so we've covered a lot of ground here. The overall performance, the pro and online wins, the DIY dilemma, and the margin game. But before we dive into their outlook and our This Is Not Financial Advice segment, let's take a quick step back and acknowledge the passing of a true legend in the home improvement industry, Bernie Marcus, co-founder of Home Depot.
Absolutely. His passing is a reminder of the human element behind these businesses. Marcus was a visionary leader who understood the importance of putting both customers and employees first.
Well said. His legacy will undoubtedly continue to shape the industry for years to come. All right, back to Lowe's. What's their outlook for the rest of the year, and how do they see things shaping up longer term?
They've updated their full-year guidance based on their Q3 performance. They're now projecting total sales to be in the range of $83 billion to $83.5 billion, with comparable sales down between 3% and 3.5%. They're also anticipating an operating margin between 12.3% and 12.4%.
Gotcha.
And adjusted diluted earnings per share should land somewhere between $11.80 and $11.90.
So, reading between the lines, they're acknowledging that the rest of the year might be a bit of a slog, but they're still signaling confidence in their long-term strategy. Makes sense to me. But you know what time it is, right?
Yes.
Yeah.
It's time for, this is not financial advice, but where we put on our speculative hats and cook up a completely outlandish yet strangely plausible trade idea based on what we've gleaned from this earnings call.
That's right. We dissect the numbers, analyze the trends, and then we let our imaginations run wild. Ready to have some fun.
Always. Lay it on me.
All right, here's the play. Buy Lowe's puts expiring after their investor conference in December. Boom.
Okay, I like where your head's at. Definitely a bold move, but not entirely without merit. Walk me through your logic.
Okay, so think about it. Lowe's is being super secretive about their grand plan to revitalize DIY sales.
Right.
What if their big reveal at the conference falls flat?
Yeah.
What if investors are underwhelmed by it? The stock could take a hit.
I see your point. There's definitely a risk-reward element here. If Lowe's manages to blow everyone away with their strategy, those puts could expire worthless faster than you can say circular saw.
Exactly. It's a gamble, but that's what makes it exciting. But let me be crystal clear, folks. This is purely hypothetical fun.
Yes.
We are not financial advisors.
Right.
And this is most definitely not investment advice. Don't base any actual trades on our wacky ideas.
Seriously, folks, we cannot emphasize this enough. This is for entertainment purposes only. Do your own research, consult with a financial professional, and remember, the stock market is not a casino.
Well said. But hey, if you've got any equally outrageous trade ideas inspired by this earnings call, we'd love to hear them. Head over to Talk Ticker's social media and share your thoughts. Who knows? Maybe your crazy idea will be the next big winner. Hypothetically speaking, of course.
And hey, if any Lowe's executives happen to be listening, feel free to slide into our DMs with a little sneak peek of that DIY plan.
Yeah.
We promise we'll keep it under wraps until December, maybe.
All right, let's wrap up our deep dive into Lowe's Q3 2024 earnings call. We've covered a lot of ground, from the hurricane-boosted sales to the strength of the pro segment to the looming question mark over DIY. And, of course, we couldn't resist concocting a slightly outlandish trade idea just for kicks.
It's been a fascinating ride, and the story's far from over. We'll be keeping a close eye on how Lowe's navigates these challenges and what they unveil at their investor conference in December. But for now, let's leave you with this. Whether you're a seasoned investor or just starting out, staying informed is crucial.
Absolutely.
Keep learning, keep asking questions, and keep tuning into Talk Tickers for more deep dives into the world of earnings calls.
Remember, folks, we break down the complex world of earnings calls so you don't have to. We'll be back next week with another deep dive into a different company. But for now, we'd love to hear your thoughts on Lowe's.
Hit us up on social media. Let us know what surprised you, what intrigued you, and whether you think our This Is Not Financial Advice trade idea is brilliant or bonkers.
And to all our listeners, whether you're seasoned investors or just dipping your toes into the market, remember, knowledge is power. Keep learning, keep asking questions, and until next time.
Happy investing.